that we expect to hear from the regulator has been highlighted, and I believe they're going to publish it on their website. And that is you can take it a roadmap, as a to-do list. That's how we take it. So it can be elaborated. It can probably become 5, 6, 7 these kind of gatherings to dive deeper into every one of the topics that are highlighted. I'm not going back into those topics, but this afternoon, after lunch, we are going to have another wonderful conversation. First, what we do is we're going to have 3 impressive presentations. You have already the profiles of these speakers and panelists on beginning from, I suppose, page 27 of the book of Abstract. So I'm not going to read everything because they have heavy profiles. I better you take time to read their profiles individually. But what I do, we are already late from the schedule by an hour, but we'll try to make up for it as much as possible. So this is what we're going to have this afternoon, and it's session 2. What we talk on the sub-theme, I would say, of this afternoon session 2, is generally on financial sector opening and foreign entry, which is, we can't have enough of conversations around this topic until we get to see who are in the market, how they're going to affect the entire ecosystem that is going to occur afterwards. But these guys, the speakers, they're going to give us an insight into how this is going to affect, how this is going to change, how this is going to impact, what are the things that we have to look into. With this, we will have the first presentation on preparing for foreign entry, collaboration, and global competitiveness. Particularly, we focus on key lessons for Ethiopian finance sector, and this is to be presented by Mr. Tewodros Sisay, who is amongst us here. Can you wave, please? Yes, he is a partner at Deloitte, East Africa Corporate Finance Leader, Africa Economic Advisory Leader, and so much experience and hands-on consulting and advisory experiences in this domain outside of Ethiopia in many countries. So you can look into his experiences from the book of Abstract. So he will present first, and then we move to another impressive presentation we expect from one of the CEOs of the banks in Ethiopia, which is the Wagagan Bank. Dr. Aklilu Wubet will join us to give his perspective as a CEO. This is the culture we need, reflecting when the CEOs themselves tell us their perspectives. And we're going to hear from him the CEO's perspective, challenge and opportunities of opening Ethiopia's finance sector for foreign participation. What do they think? We dive deep into CEO's mind through his presentation and try to understand what are they thinking. Don't you wonder? What are the CEOs thinking? We have many CEOs among us here. We are privileged year by year in the participation of number of leaders, CEOs, board directors, and chiefs, executives. And then we listen from regional experience outside of Ethiopia and on preparing for opening up of Ethiopia's finance sector and foreign entry, and what do they think that we have to do? What are the things we have to look into? They give us a perspective in this regard. And we are very excited to have Mr. Godfrey Okolobo, the coverage executive for North and East Africa and international, I suppose, from Trade and Development Bank. This morning, we've heard from Mr. Admasu, who is the president and managing director of this bank. Now we hear from his colleague on what they actually think that we have to do. I think these are very impressive presentations. And without further ado, then I will invite our first presenter, Mr. Tewodros, to come to the stage and tell us whatever he thinks. And we are all ears, brother. We are all ears. And after that, welcome. After that, we will have a wonderful panel discussion. Look at the profiles, and you will be excited. Thank you very much. I'll give you 20 minutes, and forgive me if I stop you after 20 minutes. No problem. Thank you.
Good afternoon, everyone. It's always a risk to speak after lunch, but I will do my best to make it as brief as possible. Gamachu said, generously, he said he would give me 20 minutes. I will speak about 10 to 15 minutes. I'll just touch up on the key points from my experience and then our discussions with international banks, with the local banks. What are the key things key lessons that we have seen in the East Africa side and then Ethiopia side. And then we'll have question and answers. We'll have the panel discussion, so you can ask many questions during that time. Thank you. So today I'm not going to talk about the pros and cons of opening the Ethiopian banking sector. There has been a lot of academic papers, a lot of conferences in that area. What I will cover today is the actual experiences that we have seen from making deals in the banking sector across Africa. I've worked on more than $7 billion worth of merger and acquisition projects in Africa. So I'll tell you about that experience. What are some of the discussions we are actually having right now with international banks? I'm working on 3 projects that are for 3 banks that are looking to enter into the Ethiopian market. That is one. 2 is also from the Ethiopian banking side. What are the key things that we need to prepare for this? I'm very happy to see some of my clients and here, some of the banks that are already started to prepare themselves for this. Thank you. I'm not sure if you can see the slides, but I'll talk on the key points. So there are 5 or 6 points that we have identified or we have learned from a banking merger and acquisition aspect that we think Ethiopian banks need to understand and they need to be prepared for. The first one is understanding the strategic importance of M&A, meaning everyone probably is thinking about merging or maybe partnering with an international bank. We need to understand whether this thinking will be in line with your strategic thinking or strategic plan for the bank. The reason why we say this is, one, if you have M&A as part of your strategy, then you start to prepare for this event. Why do you need to prepare for this event? Of course, you can hire us as your advisors. But on a serious note, the main reason is if you look at the data that we have seen from various transactions, the banks that have experience in M&A, in deal making, in transactions, have a better chance of creating shareholder returns down the line. The graph that you see here is an experience out of 28,000 M&A activities that has been done globally, trying to understand whether the first time banks that are in M&A activities, whether international or local, and then experience it. Down the line after 1 year, which one makes a better return for its shareholders? So you can actually see the data. The first time M&A practitioners will actually lose a lot of shareholder return. So it's important for you to get acquainted with what M&A means, what you need to do, what happens when you do M&A, and then the implication of that for your strategic roadmap as you go along. So this is the first point. If you ask any M&A practitioner, the first thing they would ask is M&A part of your strategy? So we need to start thinking about that. The second one is we need to start thinking about valuation. I have many experience in Ethiopia, across Africa, maybe other parts of the world as well, doing valuation exercise. I would say in Ethiopia, most of the time people actually take valuation as a simple exercise that could be done very easily. Valuation is very complex. I'm not saying it requires some level of expertise to do it, but the things that go through valuation is very, very key. For any deal to succeed or fail, valuation is important. And as I always say, Ethiopians are very emotional people. We attach our emotions to our work, to our business. So every time a valuation exercise is happening, everyone wants to have the largest possible valuation in that transaction. And we have seen it, valuation actually creates a lot of issues during negotiation. So having that is very, very important. When you think about valuation, there are many methodologies that we use as we advise our clients in terms of valuation. It's better to understand than your acquirers or the people that will merge with you or that will work with you present the value of your business. So you can actually ask about how they arrived at that. It's important, as you understand valuation, it's important to understand the way that you are thinking about your business over the next 5 years. It's not only about the current performance. Of course, one of the valuation methodologies remains or takes into account the current performance, but also we look into 5 years, 10 years down the line into the business. I can give you a simple example. It's not in the banking, because Ethiopian banking is not yet open, but in one negotiation, a very, very large multi-billion-dollar transaction that we were advising in Ethiopia, one of the key determinant of that negotiation discussion was discount rate. And I found out later on, actually, in Ethiopia, there is a tendency to use 10%. I don't know where this 10% come from, but 10% as a discount rate, trust me, one of the main reasons why this deal failed through is because of that discount rate expectation and discussions. So it's very, very critical for you to understand your bank valuation, the asset quality, what is going to happen in the next 5 years. All these things need to now link into the strategy, again, what I mentioned earlier. So it's important to look into that. Why are we saying that? The reason why we say this is bank valuation is completely different than other business valuations. It's a little bit complex. It also have a different nuance that is bank-specific nuances. The other thing is also what is included into your business. One of the discussions that we are having currently with international banks is international banks are mainly focused on core banking services and products. That is where their interest is. In Ethiopia, banks invest in various assets or alternative assets. So you need to understand, deal-making in the Ethiopian sense in the banking sector will be more complex than other countries because of the carve-outs, other accounting complexities that will happen. There are market factors that your team and your advisors need to bring into the table. Ethiopia is completely different than any other African country when you think about valuations. And especially in the banking sector, that complexity now increases because of the macroeconomic factors and other things that need to go into the valuation. The other thing is, when we think about merger and acquisition, especially in a sense you want to work with an international bank, you have few options, either a merge or be acquired or a joint venture. These are the kind of options that you will have. In these situations, especially in the sense that in the Ethiopian banking size, if the very large bank comes into Ethiopia, the first two options, the merger and acquisition, will be key. Shareholders want to understand what is in it for me. At the end of the day, business is all about shareholder wealth maximization. The key aspect of any merger and acquisition is synergy creation. Everyone talks about synergy. Everyone will tell you a model or will show you a model that will show you that you're going to make so much money out of this two merger of international bank and a local bank. You really need to understand what goes into that synergy assessment. The graph that you see here is from our experience globally as well as in Africa. This is a one-year period assessment whether that synergy that everyone promised was created or not. If you look at it, 68% of that synergy never happens. In fact, 21% of the deals will lose 20% of the shareholder value from the original company that was existing before the merger. 41%, 10% of the value is lost. So it's very critical for the management team to understand the value of synergy, what is synergy, what goes into synergy, the cost of synergy, the investment is required to bring that synergy out as a very critical and delicate activity. Negotiation strategy, whether you are working in the Ethiopian sense, whether you are working international banks, one of the key things that come into play when you actually sit at the table with international banks who have experience in M&A is negotiation. So the negotiation strategy needs to be part of the discussion in the board, in the executive management team, and then all that comes into play. Be prepared for negotiation. It's very, very critical. That is where actually you lose value or you gain value. And then understand the objective and motivation as well. Every bank in Ethiopia may not probably merge with an international bank or maybe acquired by an international bank. Very few. In fact, from the government side, there are only 5 licenses that could be issued to international banks. So the objective and the motivation is very, very important. 2 things will come into effect. The first one is the financial terms of the negotiation. The non-financial terms of the negotiation will come into it. Non-financial terms are more critical than the financial terms in some sense. We have a completely different culture. The cultural fit becomes a key aspect of that. One of the key things that we lose synergy is because of the lack of cultural fit in that aspect. Once you do that M&A, the biggest task is ahead, 18 months to 24 months, is integration. It requires every single one of that organization from a senior management point of view to get involved in integration activities. And it's very, very, very complex. Don't take my word for it, you can just Google it and see. And then some of the companies that you are here, you have tried integration, you have seen how complex it is. Again, as I mentioned, cultural nuances is very important. Understand financial complexities. This is now the carve-outs. Some of the businesses that's not core to the business, to the banking sector, need to be carved out. It's a very complex process. Balance sheet restructuring need to be happen. All those things bring additional complexities to any bank deal. Last but not least, at the end, every bank is there to serve their customers. That is how we make money, right? Understand the impact on customers. One of the things that I mentioned earlier, it has to be part of your strategy, is you need to understand whether that M&A is going to bring better services and products to your customers. If you are trying to do M&A with a bank that is more focused on corporate side, but the bank here is more on the retail side, there is not actually a benefit for your customers. So all those things need to come into a picture when you think about M&A. I'll be very happy to answer your questions. I'm sure you have a lot of questions. Am I on time? Perfect. Okay. Thank you very much. We'll be on panel to answer questions.